I'm about to show you how I built a $5 million real estate portfolio in under 10 years without having a ton of money and perfect credit. Let's get into it. I'm Erica Brown and this is Wealth Within Reach, and I'm excited to bring a strategy episode for you today. My last episode, if you haven't checked it out, go back and check it out. I talked about how I went from buying 1 to 2 properties every year to buying 7 in 1 year. All right. I talked about the strategy called the BRRRR strategy. So in this episode, I'm going to break down what is the BRRRR strategy, how it works, and how to run the numbers. All right. So go ahead and subscribe if you haven't already, and let's get into it. Let's talk about what the BRRRR strategy stands for. And this strategy alone has helped me to not only buy properties consistently under market value, regardless of the market. I'm talking 2020, 2021, when folks were buying properties sight unseen. I'm talking even now when, properties are staying on the market so long and people are getting crazy deals. This strategy works in any market. All right. Especially if you learn how to do it the right way. So let's talk about what BRRRR stands for. Buy, renovate, rent, refinance, and repeat. Again, buy, renovate, rent, refinance, and repeat. Buying is so important. Here's the thing that you may not realize. Real estate investors, you make the most money when you buy, not when you sell. Okay. Because when you buy, you ultimately set your future margin on the front end. If you buy low and then sell high, then you win. If you buy high and sell high, then you don't win as much. So that's why it's important that you buy the properties at the right price. When I'm looking to buy a property and I'm looking to do a BRRRR deal, I personally love to buy properties that just need cosmetic updates. I'm looking for ways that I can buy a property. It already has the roof replaced within the last 5 years, HVAC system replaced within the last 5 to 10 years. Think about your grandma's house, okay? Grandma's house are the best houses to buy because why? Grandma kept up with the roof and the HVAC system and the plumbing because she lived in the house. So the major things of the house was kept up. But what happens is these houses need upgrades, cosmetic upgrades. And I love buying these because the roof, the HVAC system, the plumbing, the electrical, those are all huge, big ticket items. But the cosmetic, a new kitchen, a new bathroom, flooring, things like that isn't as expensive as having to replace all of those things and still upgrade the property. Okay. So when I'm looking to do a value add property, I personally love the value add properties where I can just do a complete cosmetic upgrade. All right. So I'm looking for that when I'm in the buy phase. Again, a little bit later, I'm going to walk you through the numbers you need to do within this phase to determine if it's a good deal. Next, your renovation. Once you close on the property, you've gotten your loan. With me, I use a hard money loan. The hard money loan will help me buy the property, and then it'll give me money to also renovate the property as well. So I renovate the property with my budget. I get scopes from contractors. I have an itemized budget. I'm running a renovation, and then I'm making important renovations that truly add value to the property. I don't care about popcorn ceilings. That doesn't add value to the property. I'm focusing on the areas that people live the most. They live the most in the kitchens and bathrooms. I'm making the property look nice, work well. I'm also thinking about long term. If I'm keeping this property as a rental property, I'm hoping to make the necessary changes that will help to reduce my maintenance costs over time. I want to make sure I get everything done the right way the first time. Okay. So I bought the property. I'm doing the renovation. Once the renovation is complete, now it's time to find a tenant. The beautiful thing with the BRRRR strategy is that you have improved the value of the property. So now you should be also able to get more in rent when you go to rent the property as well. So you're finding a tenant now at the new rental amount. Now that you've improved the value of the property, you rent out the property. Now you go to the bank and you say, all right, I have bought this property at this price. I put all of these renovations into the property. Now the property is worth this amount of money. It should be, if you do your numbers right, the property should be worth that original amount from the beginning that you determined. the ARV, or what we call after renovation value. When you get to this point here at the refinance, the property should now be worth whatever this ARV is. If you learn from me, I'm gonna help you come up with a conservative ARV, especially in the market that we're in now, where some markets are dropping in value. So it's important that when you're coming up with this ARV, that it's a conservative number and not an ambitious number. Okay. So that way, when it comes to this time to refinance here, you're able to get a new loan that helps you to pay off your hard money lender when you bought it, pay off any down payment that you used to buy the property, pay off the cost of the renovation, and then you're able to put all the money that you put back into, plus that you borrowed for the hard money lender, back into your pockets. Okay. That is a successful BRRRR. And guess what? When you have that new money back in your pockets, guess what you're doing next? You're repeating the process. Now you're able to go and buy another property quicker without having to wait 1 to 2 to 3 years to save up for your down payment. Next, we're going to get into how to quickly run those numbers when you're thinking about buying a property. These numbers will help you identify if this deal is a good deal to consider a BRRRR strategy with. Let's get into it. All right. So when you're looking to do a BRRRR, the very first thing you need to look at, you see the property, you see that it has potential, that it needs work done. It's a value add property, and you know that there are some ways that you can add value to the property. Now, what you need to do is that you need to determine the ARV of the property, the after repair value. Before you dig into trying to schedule a call with your agent and trying to see the property, you don't need to do all that yet. What you need to do is to determine if this is a potential BRRRR deal from the beginning. So what you need to do in order to determine the ARV is you need to look at what other properties that are fully renovated that are just like yours, what they are currently selling for. Okay. What they are currently selling for today, last month, the month before that, not 2 years ago, not 8 months ago, as recent as possible. Okay. So let's walk through an example here. You find 3 examples where the property is worth on average $400,000 after the property is renovated. Okay. So then we do what's called the 70% rule. We want to multiply 70% times 400,000. What is 70%? So typically when you go to do that 4th R in the BRRRR strategy, refinance, you go to a bank, and if you're looking to refinance and get cash out where they pay off your old loan and give you cash out based on the new value, typically for an investment property, most lenders will go up to 70% of the ARV, 70% of the current value. Okay. So when you're doing your numbers on the front end, we're going to multiply that now. So you're going to take whatever the potential ARV is, and then you're going to multiply that by 70%. Okay. That number should get you right at $280,000. Okay. This number is really important. All right. So let's talk about why this number is so important. And this is where people, if you don't realize this and you try to do this process, this right here, not understanding this number can cost you big time later on. All right. So this number, 280,000, which I said before is 70% of the after repair value. This is your target number that you need to be at in order to buy the property and renovate the property. Okay. So let me tell you what I mean by that. Say the property is going for, and you've been able to negotiate it down to $250,000. All right. So that means in order to be able to acquire this property and be all in at 70% so that once this process is done, you can refinance it and get all of your money back. That means your renovation needs to be no more than $30,000 on this property. Okay. Because you're going to add 250 that you're going to buy the property for plus the 30,000 in renovation, which will get you up to 280,000, which is 70% of the ARV. Okay. That's how you're able to calculate that. So after you buy the property for $250,000, and then maybe you put down 10%, 5%, whatever, the lender, the hard money lender, whoever you use, gives you the balance to be able to acquire the property plus the additional $30,000 to renovate it. You need to get your renovation done within that $30,000. Okay. Then you get the renovation done here. Then once the renovation is complete, you go to rent out the property. All right. You rent out the property. Then you say, okay, bank, I bought the property. I renovated the property. I rented it out. Here's a new lease. Now the property is worth $400,000. They send out an appraiser to determine and confirm that the property is now worth $400,000. You close on a new loan. Your new loan, they're going to pay off the $250,000. You're going to get your down payment back that you first used to buy the property. They pay off the $30,000 that was used for the renovation. Your new loan is for maybe a little bit more than $280,000 because they have financing fees and all that good stuff. Your new loan is for, let's say, $290,000, but now the property is worth $400,000. So this helps you to go into the property with equity. This is the key strategy that has helped us to be able to build our portfolio into millions in under 10 years by utilizing this BRRRR strategy successfully. Now let's talk about, maybe you find a deal, you're not at 70% because maybe the renovation needs $40,000 instead of $30,000. Is it still a good deal? It's up to you. Is it worth buying a property and you're in, let's say you have to add $20,000 to it. Is it worth buying a property and you have a loan for now $300,000, but the house is worth $400,000? To me, that's still a great deal. So 70% is the target. But if you end up finding a deal that's close to it and you can afford the additional funds, or you have a line of credit or some type of way to be able to, fund the additional money needed for the renovation, to me, that's a good deal. All right. So was this helpful for you? This is my first time doing a strategy session through YouTube. Let me know if this was helpful for you. Let me know if you have any other question or any other strategies you would love for me to work out. I love to do this. This is what I do all day, every day with my clients in my mastermind program. If you're looking for someone to break this down for you in person, one-on-one, hit me up. I love to work with clients who are ambitious and excited about real estate, and I can do this for you as well in person. All right, guys, I'll see you at the next episode. Don't forget to subscribe. Thanks so much for watching.